The last 24 hours has been extremely interesting for Bitcoin. We've seen CPI come in 0.2% lower than expected. It was expected 7.3. We saw it come in at 7.1. Obviously, that led to a bullish market reaction, and Bitcoin has managed to break above the critical 17.7K level that we've been discussing for almost a month now. That's very good. We also have many other pieces of good news on the charts, but also some bad news coming from the S&P 500 chart where we're rejecting from resistance. And FOMC in 12 or 11 or 12 hours by the time this video gets out will kind of be the deciding factor as to whether this breakout will be successful above 17.7K or whether or not it will be failed and will drop back down and retest those lower levels. Big 12 to 13 hours coming up here, guys. We need to get into the charts. Check out the pinned comment, check out the links in the descriptions. We've got VIP group, right, which we do trade signals on. We've got the community Telegram discussion group, and we've got the Crypto Academy courses, which you can look at as well as our BitGet referral link. All right, guys, let's get into the video. Okay, CPI did release yesterday, as we discussed in the introduction. Again, it came in at 7.1%. It was expected. The market was having a consensus of 7.3%, so it was 0.2% lower than expected, which did lead to bullish price action. We can see that reflected quite clearly on the 4-hourly chart. We did have an ascending channel formation. We still do have an ascending channel formation, actually, and an ascending broadening wedge formation. It's kind of messy, but you see that massive spike in price action all the way from that 16.8K level all the way up to the 18.2K level, which is a significant move, right? It doesn't sound like it because the numbers, but you have to remember it's all that percentage, not exactly dollar signs. That was an 8% move. That's pretty significant. Now, again, a lot of people are expecting that move to be bigger. Personally, I probably was as well, but again, I'll say it again, the reason why it wasn't is because people are waiting for FOMC still. When this FOMC decision happens, that will be full clarity for the market. They're waiting for the information on that. As of right now, Bitcoin has managed to get above 17.7K. What is the significance of that? Well, we can go ahead and look at that quite simply on the daily chart. Right? If we look at what 17.7K actually is, and you guys are probably well aware of this by now, but bear with me, right? It's the June low. That's where we bottomed out in June, 17.7K. So us getting above that level basically means we're back in the old range. We had a range here, that was the bottom of the range. We were bouncing off of it, we dropped below it, now we're back in the old range. We're just hanging on by a thread. Okay, and this is why FOMC is so important, because we are on thin ice. If FOMC comes in bearish, FOMC comes in at 75 basis point hike, which would be a bearish hike, which we have about a 20%, 20.6% probability on the right-hand side there of it happening, we will be dropping back below that 17K level, and we will likely go down and test new lows. Now, if we come in at 50 basis point hikes, which is a 79.4% chance, it is more likely than not that that happens. We will most likely be maintaining above this 17K level, and probably actually moving to the upside as well. And in the next few weeks, next couple of weeks probably, we'd be testing this critical yellow downtrending line, which is our bear market breaker zone. Now, when I say bear market breaker zone, I do not mean that the price bottom would be confirmed 100% guarantee if we break that yellow line and the bull market support band. That's not what I mean. What I mean is that would be enough confirmation for us to buy the rest of our holdings into Bitcoin. We bought 50% at 17 to 18K around here in October or November, and we're going to buy 50% at a break of the bull market support band, which would be a break of that yellow downtrending line as well. That's what I mean. Now, for the actual bear market to be fully confirmed to be over, for the bottom to be 100% fully confirmed to be in, we'd actually need to see a break above probably 28K. And you know, why do I say that? Well, I can show you. It's quite simple in my opinion. 20.8K, let's go to the weekly chart and we can quickly look at this, okay? It is basically the level we held for support throughout the entirety of the bull market, the whole bull market, 20.6K. Bang, get above that again, then we're back within this entire range here, and this range can be left behind us, right? That is the complete and utter confirmation of the bear market being over. But obviously, not many people are willing to wait, including myself, until 20.8K, which is a literal 61% gain away. So I would be happy enough at this point in time, especially if it happened in Q4, as per the 4-year cycle theory, to buy back into Bitcoin fully when we broke the bull market support band in the weekly candle. I've already bought 50%, and that's how the channel's kind of running it. Now, on the occasion that we do go down, I'll get into new charts in a second, apologies, but on the occasion that we do go down, we will be buying the rest at 13.8K to 11.5K. I see that as unlikely at this point. I think that the bottom is in. I'm a big believer in the 4-year cycle theory, right? 4-year cycle theory does say the bottom will be in Q4. Guess what? We're in Q4 right now. We saw the bottom in November. That would be perfect. That would perfectly align with the 4-year cycle. And you could pause the video there and take a look at the date range trend. But as of right now, nothing is confirmed at all. In fact, we're at a rejection point. Okay, we are at a rejection point. That's very much worth noting. And we can see that quite clearly resonating on the weekly chart RSI. Look at this downtrending line in the weekly chart RSI. That's stemming from January 2021. It got rejected in November 2021, and it's been rejected again in October this year. Right now, we are at resistance there, which means, right, very important, which means if we move upwards just a little bit more, just a couple thousand more on Bitcoin, we close the weekly candle there in 4 days and 19 hours, that will be a confirmation of a break of that weekly RSI trend line, which very, 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 very rarely would lead to a fake out. Very important. Weekly RSI trend lines don't lead to fake outs very often. If we break this line, which is why it's such a critical point right now, that's great. That's great news. It's very unlikely we drop down further. Now, what's more interesting, right, is that we can actually get a time frame on when this line will break. We have a support line on the RSI as well, and we can see that this triangle formation, using the downtrending line and using the uptrending line, comes to an apex around the start of January, right? Which means we will be breaking that line to the upside or breaking it to the downside around the start of January, which actually does line up with the 4-year cycle, right? Because the 4-year cycle, it's a Q4 bottom. However, it can spill into January. We've spoken about this before. It can go as deep as probably mid to late January before it becomes a little bit invalid, okay? If we break this to the downside and we form a new low, that break will be beginning at the latest point at the start of January, meaning we could actually form a new low within the 4-year cycle theory below 15.4K, and it'd probably be within the time frame of the 4-year cycle, right? That's good news. But I just wanted to point that out, right? Very important rejection zone right now on the weekly chart, and that's probably why we didn't see. That's probably one of the reasons why we didn't see a move as big as we expected. One of the reasons was FOMC. Another reason was the fact that we're at a critical point right now, right? We're very much at a critical point, and this could very easily be a fake out. It also could very easily be a point in which we flip the entire trend. I would lean towards the latter. Now, okay, what else can we look at here? We've got an 8-year uptrending support line on the weekly chart, which is one of the reasons why I think the bottom's probably in, right? We tested that quite clearly. We had one wick on that and we bounced straight off of it. We've also wicked on it at the same time as we tested a horizontal support line on the price chart. I just drew it in there. I'll make it a dashed pink line. That is very important. We tested that and we held it for support quite strongly. We also have, this is called the Bitcoin long-term power law chart. Essentially, it's a couple of, they're slightly converging lines on the logarithmic chart on Bitcoin, and it's kind of marked the bottom in all bear markets at this point in time, including COVID, and it's marked the bottom again at that 15.4K level, right? So you have to understand here, guys, and this is where I get into kind of the bottom. You have to understand, for the bottom not to be in here at 15.4K, we would lose a significant amount of macro structure. Now, we can very well do that. And we could very well do that and still maintain the 4-year cycle theory, as we explained before, which is the strongest piece of macro structure we have. But it wouldn't be healthy. We want, for the longevity of Bitcoin, to be bottomed out here. We do, right? We want as much macro structure to remain alive as humanly possible. If we lose macro structure, we lose long-term predictability. If we lose long-term predictability, retail investors and institutional investors alike are less likely to invest long-term in Bitcoin, which leads to an overall weakness in not only Bitcoin, but crypto as a whole, because Bitcoin controls the market, right? I want to briefly interrupt this video to talk about the BitGet Exchange. The BitGet Exchange has 5 times lower fees than Binance, which is the biggest major exchange in the cryptocurrency market on futures. It also has 0 fees on every single spot pair, so you can trade spot for entirely free, no fees included. It runs events. Right now it's got a FIFA World Cup event sponsored by Messi, the football player. It's got copy trading, strategy trading. It's got exclusive rewards and discounts in the rewards center. It's got everything you need for a trader using Exchange. This is the exchange I personally use as a trader for my everyday trading, and I highly recommend everyone does so at the Wolves of Crypto YouTube channel. Sign up using my referral link for exclusive rewards and discounts. That really helps out the channel, and I appreciate it. For my fans from the United States of America, you can sign up using this exchange with a VPN and use the exchange with a VPN and just sign up using my referral link like normal, and you'll be treated like a normal customer because this is also a non-KYC exchange. So make sure to sign up using my referral link in the pinned comment or the description below, and without further ado, let's get back into the video. So not only do I think at about a 60 to 70% probability that the bottom is in here. Again, it's not super confident. I said 60 to 70% for a reason, right? I'm not overly confident in it. Not only do I think the bottom is probably in, I want the bottom to be in, right? And I suppose you could say that leads to a little bias, and you're probably correct in that. But that's kind of the situation I'm in right now for Bitcoin. I think everyone should agree with that. Now, look, and I can't tell people what to agree with, obviously, but that's just me. Okay, and now another thing we need to look at here is the 12-day chart and the MACD on the 12-day chart specifically. Now, if we zoom up, right, if we zoom up on the MACD 12-day chart, I think this was talked about by another analyst. I can't remember exactly. I've definitely got this from somewhere on YouTube though. What we saw basically is every time we've seen a bullish MACD cross, sparing a couple of occasions on the 12-day MACD, it's kind of occurred either at the bear market bottom or before a major pump, right? 2015, MACD cross, confirmed the bear market bottom, we saw a major pump. Let's find some more ones. Here we go, 2018, same thing, confirmed the bear market bottom, and we saw a pump based on that, okay? Another one would be COVID drop. After the COVID drop, MACD cross 12-day chart, we saw a pump off of that. The only time it didn't quite work was actually over here in 2021. But even then, when we saw that MACD cross, we did see a small resurgence in price from 40K to 69K, right? So we did see a pump off of it. But right now, what's very important is that MACD cross is occurring again. In fact, we've actually seen it here. And in 18 hours, provided we don't drop below 17K or something, which is actually possible considering FOMC could come in bearish. Provided that doesn't happen, we could see another MACD cross here on the 12-day chart, which is historically, as you saw, led to the last two bear market bottoms and also a major pump in 2021. That's very interesting. You can see that the more I talk here in this video, the more the charts seem to align with the bottom being in. I think that most analysts at this point who actually look at the charts and look past the macro, it's very important that you do that. Look past the macro. They do see that the charts actually look very strong right now. They don't look weak at all. I can't really see much weakness. I suppose the short-term chart is not particularly strong. It's a ascending channel formation or an ascending broadening wedge. That's fine. Again, the macro doesn't look good. This is something we have to look at, the S&P 500. But again, I encourage people to look past the macro a little bit, but you can't completely ignore it, of course. The S&P 500 really doesn't look good right now. We had a massively downtrending line here stemming from January 2022, tested on 3 occasions. We broke above it yesterday very briefly during CPI. We had a huge wick to the upside and we dropped all the way back down. That's a huge fake out. Now, I hope that when FOMC comes in, it's at 50 basis points, and I hope that will give us enough strength here on the S&P 500 to break above that downtrending line. Until that happens, S&P doesn't look very good, and it does put the market in a slightly risky position. But moving forward further, total cryptocurrency market cap, it had a major red resistance line. We broke it to the upside, right? We were consolidating below that for many, many days, and we broke it to the upside as well. And what you'll note as well is that this downtrending yellow line on the S&P 500, on the total cryptocurrency market cap, lines up with the bull market support band in the same fashion that it lines up with the bull market support band on Bitcoin. The Bollinger Bands, I know I'm just tossing information at you at this point, but the Bollinger Bands as well on Bitcoin, still compressing, still room to move more. One more thing I wanted to look at in this video is the 3-day RSI support line at 34 on the RSI. You will be able to see it if I move my camera out of the way. 34 on the RSI. Every time we lose that, we see a massive drop. Every time we bounce off of it, we'll see a massive pump. Right now, we've very clearly bounced off of it, and we could be seeing a continuation of the pump to the upside. I suppose the main thing, because I know, I just tossed a bunch of information at you, I apologize for that, but the main things I want to recap are this, okay? These are the main things you need to be looking at right now for Bitcoin, and I do stand by this. The main things you need to be looking at for Bitcoin right now is the weekly chart RSI, okay? Draw in that triangle formation. That weekly chart RSI is going to be very, very, very important, right? Wait for weekly candle closes and dissect it. If we close above it, that's great. Close below it, not too good, okay? That's the main thing. The second thing we need to look at is the downtrending yellow line and the Bollinger Band and the bull market support band, on the daily chart, which is the critical breaker point that we discussed before. And the third thing you need to be looking at is shorter term charts and understanding what the importance of 17.7K is. If we drop below that, close below it, not good. If we remain above it and pump to the upside, very good. Those are the three main things you need to look at. Again, FOMC in 11 to 12 hours. We will be discussing that in the video tomorrow. Hopefully we see a 50 basis point hike. We don't want the situation to get much worse, all right? We don't want to go down too low on Bitcoin. We risk macro structure. We're getting very late into Q4 here. The 4-year cycle says the bottom should be in already or should be in at the latest within a month, within 30 days probably. Again, I said mid-January, probably mid-January at the latest. We're getting to the end point of the bear market here, and we don't want to see the macro drag Bitcoin down more than needed, right? If that happens, I don't know, man. It's not going to look particularly good. We're even seeing rumors come out about Binance and FUD there, and many exchanges kind of shaking in their boots here, over leveraged, right? We don't want to see, because look, downside price action, it puts more pressure on exchanges. We've already seen the second biggest exchange in cryptocurrencies in the cryptocurrency market go down. We don't want any more of that. Too much damage will literally destroy cryptocurrency. Okay, this is something that Megawell Crypto agrees with me on, right? We don't want too much damage. We need to see a healthy bottom. And I think 15.4K was a healthy bottom. I also think that provided it happens within a reasonable time period, 13.8K or even 11.5K are pretty healthy bottoms as well. Anything below that and anything longer than January, it's not looking particularly good at that point. So fingers crossed here. I do think the charts look pretty good. We'll wait for FOMC and we'll get back into it tomorrow. Cheers, guys.